dollars are debt. In other words, when one holds a dollar, a central bank, they hold a debt asset. And generally speaking, the world is holding a lot of US dollar denominated debt. So the holders of that would say, I'm already overexposed to US dollar denominated debt. And so there's less of a eagerness to buy the debt. And that eagerness to buy the debt is also reduced by, two main things.
The growing debt crisis has recently prompted an interview request to billionaire investor and founder of Bridgewater Associates, Ray Dalio. His discussion of the situation at Silicon Valley Bank continued. In addition to his warnings and investment tips, Dalio highlighted several major geopolitical and economic risks. The veteran investor and founder of Bridgewater Associates explained why he thinks the next 2 years will be extremely risky. Dalio believes the collapse of Silicon Valley Bank is an early warning sign of a canary in the coal mine, of a more systemic problem in the venture capital industry. This, in his opinion, is a textbook case of the bursting of a bubble in the short-term debt cycle, which occurs frequently in the economy.
In this period, is that a lot of government debt was sold. And it was sold to a lot of buyers. So when you look at Silicon Valley Bank situation, and it's important to understand that that's just one example of an enormous number of cases in which short-term borrowing was used to finance the purchase of a lot of government bonds and beyond bonds beyond that, mortgage payments and also corporate bonds and so on, because money was given away free. I mean, think about it this way. The interest rate the government interest rate was 0.7%. Low grade credits were about 3.5% interest rate, but they also had interest only loans. So it meant you really didn't have to pay hardly anything to get money. So we have all of that debt and now the government bonds have gone down, and it's funded by short-term debt, which the cost of money has gone up. Now, that's not just banks. That's not just the United States. That's a world phenomenon. It existed in Europe because the central banks there in Europe provided money like that. Imagine they created negative interest rates for money. So how does somebody make money holding a bond that has a negative interest rate? The way you do it is you have a more negative short-term interest rate that you borrow to fund it. And so that's what went on, and that's what we have. So if you look at, let's say, if you marked to market the bonds that at existing rates, you have a lot terribly financially hurt, negative net worth entities around the world. The world is leverage long. So we have that dynamic going on at the same time as we have the other things that I was referring to. So that's the financial dynamic. Problem is we spend more money than we earn. We are in debt. And we have large wealth and opportunity gaps and large values gaps. And then there's a lot of fighting over those things. And they're not easy to repair at that stage because, let's say, what do? You want to get financially stronger. Okay, financially stronger means you earn more than you spend. Okay, how is that going to work? Okay, are we going to, it's so easy to say earn more. Well, it's not easy to earn more. And then what? Or cut expenses? Like you're not going to cut expenses. And then you deal with taxes to try to make the balance, and people don't want to get taxed. So there's a fight over holding on to wealth and how that works. And then you have this polarity, and you say, well, you have to have this problem dealt with in a united way, smart, united way to make the difficult choices, but it's very easy to say, but you have that fragmentation. There are short-term cycles that build up to create a long-term cycle. So, for example, we're used to what's commonly called the business cycle or the short-term debt cycle, in which there's a recession when there's economic weakness and low inflation, and then the central bank provides credit, and that stimulates activity, and then you have the pickup and the good time in the economy, but then it raises inflation and tightness and so on, and then they create tight money, and then you go through the contraction again and so on. So since 1945, there have been 12 and a half of those cycles. On average, they're about 7 years long, give or take about 3 years. So if you say, okay, where are we in that cycle? We're in the business cycle. We're about halfway through. We're in the part of the cycle where the tightening of monetary policy to fight inflation begins to cause the cracks. And that's where we are. Okay, now those add up to a big cycle because debt rises relative to incomes through that because everybody wants the higher up. And so they just keep doing that. And so we have a lot of debt assets and debt liabilities. We think of there's a debt that you owe, but one man's debt is another man's assets. And so you have to keep interest rates high enough that it compensates for inflation for holding it. Because if you don't, nobody's going to then want to lend and you have a problem. But you have to have interest rates not so high that they crack the economy. And so when you have debt, a lot of debt assets and a lot of debt liabilities, having that balancing act is not easy. And so because we had the imbalance, the central banks of the world had to come in there and be buyers. They had to print money and buy that debt to make a balance at an acceptable interest rate. So we have that problem. That produced inflation, and we have the financial problem. Now that's connected also to what's happening in the world order, because the United States and China, most importantly, are approaching a war, the greater risk of war, and also Russia is in that there have been, supply lines, supply chains have been broken and supply lines and so on. And that has worsened this set of circumstances for reasons having to do with geopolitical and so on. What we're seeing now is the world order breakdown. So, for example, there used to be more of an international trading system. Trading existed, and it was like, how do you trade in general? Now that's broken down for the most part, and there's what we call bilateral. So one country with another, but it's broken down. If you take the development of technologies now, for example, one would like to be able to have a system for creating an agreed upon system of creating orderly management of technologies and so on. Yeah, otherwise you have a chaotic system. And the same is true for everything. The World Trade Organization, the World Health Organization, the United Nations, and so on, were the IMF. These systems were meant to be world orderly systems, and now they've become essentially irrelevant. And there's no, not totally, but largely irrelevant. And so we have this set of circumstances taking place in a disorderly way rather than an orderly way.
He went on to say that he has doubts about everything. Instead, he thinks that the key to successful investing is diversifying one's portfolio so that it is not overly exposed to positive or negative market movements.